Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is October 17th, 2025, and we're diving into the latest earnings report from Charles Schwab. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Charles Schwab's impressive third-quarter results.
Let's get started. Charles Schwab has reported record revenue and earnings for the third quarter of 2025. Can you give us a brief overview of the company's performance?
Absolutely. Charles Schwab reported net revenues of $6.1 billion, up 27% year over year, and an adjusted earnings per share of $1.31, which is a 70% increase compared to the same quarter last year. These results highlight the company's strong growth trajectory and operational efficiency.
Revenue and profitability overview. Let's start with the top line. Charles Schwab reported a net revenue of $6.1 billion for the third quarter, which is a 27% increase year over year. John, what are the key drivers behind this impressive revenue growth?
The revenue growth is primarily driven by a significant increase in net interest revenue, which rose by 37% to $3.5 billion. This was supported by a 21 basis point expansion in net interest margin to 2.86%. Additionally, trading revenue increased by 25% due to robust trading volumes and heightened client interest in derivatives.
And how about profitability? The adjusted earnings per share came in at $1.31, beating the analyst's forecast of $1.23. What contributed to this strong profitability?
Indeed, the adjusted EPS of $1.31 exceeded expectations. This was largely due to effective cost management, with adjusted expenses rising only 5% year over year and a strong pre-tax profit margin of 51.3%. The company's focus on operational efficiencies and strategic cost-cutting measures has clearly paid off.
Client growth and asset management. Moving on to client growth, Charles Schwab attracted $137.5 billion in core net new assets this quarter. How significant is this achievement, John?
This is a remarkable achievement, representing a 44% increase year over year. It underscores Schwab's ability to attract and retain clients, driven by their comprehensive wealth management solutions and favorable market conditions. The total client assets have reached a record $11.59 trillion.
And what about new brokerage accounts? The report mentions over 1 million new accounts for the fourth consecutive quarter.
Yes, that's correct. Schwab's ability to consistently open over 1 million new brokerage accounts each quarter is a testament to their strong brand and client trust. Additionally, managed investing solutions saw net inflows grow by 40% compared to last year, highlighting the increasing adoption of their wealth solutions.
Capital management and shareholder returns. Let's discuss capital management. Schwab repurchased 28.9 million shares for $2.7 billion this quarter. How does this fit into their overall capital strategy?
Schwab's share repurchase program is part of their broader strategy to return excess capital to shareholders while maintaining capital flexibility. Year to date, they've returned $8.5 billion across all forms, which complements their strong business momentum. Their Tier 1 leverage ratio remains robust at 9.7%, indicating a solid capital position.
And what does this mean for investors looking at Schwab as a potential investment?
For investors, Schwab's capital management strategy signals confidence in their financial health and future prospects. The consistent return of capital through share buybacks and dividends enhances shareholder value and reflects the company's commitment to rewarding its investors.
And CFO insights. Let's hear from the leadership. CEO Rick Wurster emphasized the company's focus on client growth. What insights did he share?
CEO Rick Wurster highlighted the company's success in attracting $137.5 billion in core net new assets and over 1 million new brokerage accounts. He attributed this to Schwab's unwavering focus on delivering for clients and the increasing adoption of their wealth solutions.
And what about CFO Mike Verdeschi? What were his key points?
CFO Mike Verdeschi discussed the company's balance sheet optimization efforts. He noted that client transactional sweep cash grew by $13.5 billion, allowing Schwab to reduce higher-cost bank funding by $12.9 billion. This strategic move enhances their financial flexibility and reduces funding costs.
Key takeaways. In summary, Charles Schwab has delivered a strong performance in the third quarter of 2025, with record revenue and earnings. John, what are your final thoughts on Schwab's investment prospects?
Schwab's robust financial performance, strategic client growth, and effective capital management make it an attractive investment. Their ability to consistently exceed expectations and adapt to market conditions positions them well for future growth.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Charles Schwab's performance in the comments below.